And I think going forward, we will have officials from the Ministry of Statistics with us in these press conferences so that questions related to statistical estimations, they will be able to shed more light and offer better perspectives than I will be able to do, since I will be coming from the macroeconomic angle. So I just wanted to inform you about the presence of these two officials on the call, and my sincere thanks to them for being here. I think advanced economies, I talked about the fact that manufacturing and mining have been principal causes of the slowdown, and especially coal, natural gas, and crude oil constitute nearly 50% of the mining sector, and they have been tepid in the second quarter, and that is the reason. But if you look at the global scenario, you can see in the second quarter, manufacturing purchasing managers indices came down below 50 in the European Union, and also globally in general, it was below 50, whereas in the case of India, it has remained above 50, emerging, as you can see on the right side of your chart. So there is an impact coming from the global supply chain uncertainties, partly because of the unexpected growth under recovery in the in China, which also led to concerns about higher imports from that source, from that country, which would have also had an impact on domestic prices and therefore domestic manufacturing. And some of you may recall the press conference and statements made by Mr. Narendran of Tata Steel in this regard not so long ago. And also geopolitical risk and uncertainty flared up in the second quarter, leading up to the presidential elections in the United States. More importantly, there has been a very big spike in trade uncertainties as the election season progressed in the United States. So, and the global supply chain pressure index also went back up below zero. So we want to put the second quarter slowdown, which is, while most of us anticipated it, in the light of the excess rainfall and therefore lower footfalls in purchase of consumer durables, and also some religious observance days falling fully in the month of September, we wanted to give you some more perspective on the higher than expected decline in the growth rate, which is the second derivative, and global factors play a role, and some very specific sectors in India within manufacturing and mining are also playing a role. So one should be able to interpret the slowdown, therefore, in the right perspective. And that is why these global developments naturally showed up in the suppliers' delivery times index, becoming slower, and also growth in new export orders moderated much more sharply in the case of India's manufacturing goods. So there is a shadow or a spillover from global factors on domestic manufacturing, which is what we see in the data as well. But however, what we need to focus on, remembering the fact that we are already 2 months into the third quarter, and the current financial year is barely 3 months and a week away from concluding. But I think by and large, we should expect to see the growth in second half of the current financial year when it is reported. We will get the first estimates in January, the advance estimate, and then the first preliminary estimate in February, and of course the other estimate in May as well for the full financial year FY25. So what we are seeing in this slide is the fact that Kharif production has been very high, both in the food grains, in rice, and also there is higher MSPs, which should incentivize Rabi sowing. Storage reservoir, water storage in reservoirs is very adequate for the Rabi crop, and fertilizer availability is at comfortable levels. So the kind of pickup in agricultural sectoral growth that we have seen in the last 2 quarters, we expect it to continue in the second half of the year as well.